Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Wednesday, August 24th. We discussed yesterday the what I call false sense of security setup and that we were looking for bullish action. It is a bullish pattern in terms of behavior. The movement we saw here in the NASDAQ is right on target in terms of the size of the move, that kind of behavior. We're looking for kind of a rest day today. In terms of price action, so that would be typical for that market right now. And where we are seeing this lack of clarity, though, is in the currencies. When it comes to the euro, it continues to struggle at key levels. So we're looking for more of a sideways type market. We should see more of a commitment there, like we're seeing here in the Aussie dollar. This really has a chance to get up and get going. But as we talked about in the advanced video, there are some challenges sitting here that aren't insignificant for that particular market. So currencies right now, kind of a sideways type market for today's action. And I expect pretty much the same for the notes and the bonds. The notes did trade through this red line or a sell level. The difference between the green line and the sell line here in the notes is 76 ticks. And each tick is $31.25. But again, I am not suggesting that anyone do this trade or that anyone would have the same results as that we're seeing right here, right now. It's just to give you an idea of how, an expression of my opinions of how I see these markets unfolding. Let's move on though, and let's take a look at the metals. We're not looking for a big move in those interest rate markets. We are looking for the potential for buyers to step back up a little bit here in the metals. In gold, we did trade back down again through that sell level. The difference between the green and the red lines here is $90. Each dollar is $100 if you want to get a relative feel for the magnitude of change here. So that would be $9,000 a contract. That's what this price movement would represent. And again, not suggesting anyone should get that. But what are we looking for today? We're looking for that kind of a rest day. We also saw silver backing off here a bit as well. It went through that red line, and that difference here between the green line and the red line in silver is $2.60. In silver, each penny is $50, or this trades in half-cent increments, 0.005, so it's a half of a cent, and that's $25. So each penny is $50. Each 10 cents would be, so 41.50 to 41.60 right here. That would be $500. Again, to give you a feel for that price change, and not suggesting that anyone should get that or do that type of trade. Now, copper did trade back up through a buy level. It did not reach a magnitude objective, and it did reach a risk parameter. For all these markets, I have price objectives and risk parameters that I think are appropriate for the way these things trade based upon the volatility and the candle charts and market profile principles. But this is an example of a trade that did not work. It was created a loss. Now let's move on though, and let's take a look at energy. Crude oil, we are seeing a little bit of buying coming back in because we're seeing a mixed bag when it comes to the US dollar. This market wants to go higher. I just don't think it's really sustainable at these levels, and nor is there really a fundamental reason for this to go up other than the US dollar. Natural gas, we're looking for a rest day in that market. Where we are looking for action to continue are in these grains, and we are looking for buyers to step up to the plate as these markets continue to rally. They are also at key levels. Well, that concludes today's market studies. Thank you for joining me. Looking forward to being with you again, and in the meantime, take care.